Welcome back. You're still with us on Markets Today. Well, let's go through the rest of the headlines that we're tracking for you, which brings us to the fourth headline today. Coal India was a relative outperformer, up close to around 1.5% after achieving 43% of its production target that it set out for FY23. They came out with their operational update for the month of September, and on the dispatch front, well, it looked quite good. You know, it was up close to around 1% odd, but that's on a high base. So 49 million tons is what they achieved for the past month or so. On the production front, well, it continues to look good. It was up close to around 12%. But for the first 6 months of the year, things are really looking very good. Offtake was up close to around 8%, production was up close to around 20%, and those data points are quite encouraging. For FY23, they had a particular target. And in the first 6 months, on the offtake parameter, well, they've achieved close to around 102% of what they set out to. Not just that, on the production front, they say that they had a target of 700 million tons, and they're sticking by that. Till now, they've achieved close to around 43% of the production target. And as we know, the second half of the year is relatively better. So they expect a good growth in the second half of the year. Besides that, it has cash in its books. It's a dividend yield stock as well. The only fear is the stock has corrected from the recent peak, because the fear is maybe the government could possibly take some money off the table via some divestment. No confirmation on that front. But from the recent peak, the stock corrected close to 10%. And today, though, it did see some buying at lower levels. And that's why was a relative outperformer. But talking about gainers today, well, Pharma Index, that was the only sectorial gainer well in the green in an otherwise weak market. But it closed with gains of close to 100%. You had stocks like Lupin, Zydus, Oro Pharma. All of them were up close to around 5%. Ekta joins us to run us through a wrap on the pharma sector. Ekta?
Well, yes, pharmaceutical stocks have been buzzing and continue to do so in today's trading session. One of the reasons, obviously, is some amount of defensive buying which is coming in. But besides that, maybe there is some amount of incremental positivity when it comes into the fundamentals. For example, the US price pressure is expected to reduce to around 5 to 8% versus the heightened levels of around 10 to 15% earlier. The Indian pharma market, that is estimated to continue growing in double digits, 11 to 12% in the next 3 years. Also, one of the big headwinds which the street was fearing, which was basically the essential list of medicines for 2022, that too has been announced, and hence one of the big headwinds or uncertainties is now out of the way. Separately, a lot of companies or analysts are bullish on the Revlimid generic opportunity, which is basically the blockbuster cancer drug. For Dr. Reddy's, for example, estimates are that they could make around $500 to $600 million in the next 3 odd years, and the others such as Cipla as well as Zydus could make up to around $300 million in the next 3 years from this particular opportunity. Now, specifically Cipla, remember that stock has been gaining a lot of momentum and has been outperforming. The street seems to be optimistic on Revlimid generic, on other opportunities such as Advair generic, as well as the company is guiding for around 2 to 3 complex generic drugs per year in terms of a launch. Lastly, risks continue. One of the biggest ones is the US FDA inspections picking up. Recent inspections included the likes of Biocon, Cipla, Glenmark, Torrent, and a couple of them US FDA challenges continue. For example, Cipla, Glenmark, Lupin, Aurobindo. Now, other risks also include US price pressure not going as anticipated, for example, not deflating, challenges in the launch pipeline, and fear on the cap of trade margins when it comes to the India business and large amount of discounts. While stocks have corrected significantly and have caught up as well, they are quite significantly away from their 52-week valuations, except for a handful such as Cipla and Sun Pharma.
Well, thanks a lot for that, Ekta. Moving on then, Sebi announced a series of measures on Friday after a board meeting. The market regulator has issued regulations for stricter IPO disclosure. They've also introduced pre-filing of IPO documents along with some others. Yash Jain, well, he's always the man for the job with regard to what Sebi announces, and he joins in to run us through the key takeaways from Sebi's announcement. Yash, over to you. Explain it to us.
Well, that's correct, Nigel. So you said a series of, changes brought about by Sebi. I have picked 5 most important ones which one needs to look at. The first one is stricter IPO disclosures. Here, market regulator Sebi has said that all companies, new age or traditional, will have to disclose key performance indicators or KPIs along with the traditional financial matrix in the DRHP document. The second one is that companies wanting to come out with an IPO will have to disclose the price per share of the past transactions which have happened in the previous 18 months prior to the IPO. Well, if there have been no transactions in the previous 18 months, then in that case, companies will have to disclose the price per share of the last 5 transactions which have happened in the last 3 years prior to the IPO. The third one on the IPO front has been introduction of pre-filing of IPO. This is essentially companies can go to market regulator Sebi, file their documents in confidentiality, not disclosing the key sensitive business information to the regulator, and as they get closer to launching the IPO, they can disclose those key sensitive information in the public domain. The next one is modification around OFS framework. Now there is no threshold of 10% in terms of shareholders wanting to sell through an OFS. There is no threshold as such. That has been removed. There has been some amendment around open offer. Here, Sebi has removed the dispensation considering 60 days when it comes to volume weighted average market price, when it comes to strategic divestments of PSU companies. And finally, market regulator Sebi has decided to include mutual fund units under insider trading regulations through a separate chapter.
Okay, all right, Yash, thanks for that. Well, finally, the fifth headline today, crude prices surged over supply concerns. Meanwhile, crude prices was down close to 20% in Q3 owing to weak demand. Manisha joins in to run us through details on that front. Manisha?
Yes, there is a sharp uptick in the crude oil prices, and this is especially after nearly 7% decline in the month of September and 20% of a fall in the quarter gone by as well. But it is about the weakness in US dollar index, which has come back from the 20-year highs that we saw in the previous quarter itself, the previous fortnight as well. And then it is also about the OPEC and allies meeting, which is happening on 5th of October, where the markets are working with the fact that you could be looking at a 1 million barrels per day of a cut coming in from OPEC to ensure that the prices hold at these current levels. It doesn't augur well for OPEC if the prices fall to below $80 a barrel, and we have seen that level a few times in the previous week itself. Well, if you look at the global markets right now, we are working with a deficit of around 0.6 million tons. If OPEC and allies do cut 1 million barrels per day, then we will be looking at a deficit of 1.6 million barrels per day. So this is what the markets are calculating right now, and you have seen that premium come in for prices. The third factor is really about the European Union, where they have put out a date as 5th of December when they will ban Russian oil and gas. The markets are not self-sufficient right now, and with Russia cutting output and European Union ban on Russian oil and gas also seems to be adding premium to prices. So this quarter promises to be quite volatile, but the markets do believe that it is going to be more bullish rather than bearish for this quarter. We already have seen the hurricane season begin, and with the kind of deficit we are working with and the kind of stronger data that China finally is coming out with, the Chinese demand could be coming back into the markets as well. So all factors as of now pointing towards better crude prices going forward.
Thanks a lot for that, Manisha. Well, on that note, though, we'll wrap up on this edition of Markets Today. Thanks so much for watching.